Uh-oh, is the roof caving in on the housing market? The National Association of Home Builders predicting a major housing crash due to a combination of inflation and high interest rates. Mortgage rates now over 7% for the first time in nearly 20 years. Some economists now say we won't see a crash like we did back in 2008. But what does it all mean for homeowners and home buyers? Here with me tonight, CapitalistPig hedge fund manager and Fox News contributor, Jonathan Hoenig. He's haberdashered and he's ready to go. Very happy to have you here, sir, because maybe you can bring some clarity. People are they're scared they're not going to be able to afford a home if they're first-time buyers, and if they're selling a home, they're worried that they're not going to get any bites at their apple. So how is this different?
Every indication, Kennedy, I mean, crash is a little bit hyperbolic, perhaps. But look, every indication, at least for now, is that housing prices are going to continue downward, in fact, pretty dramatically. As I said, look at the data here. I mean, mortgage contracts, I mean, new home sales, every element of that. As I said, the hard data suggests that housing is extraordinarily weak. Even something like IYR, that's the exchange-traded fund that tracks real estate, U.S. real estate investment trusts, it's down by about 28% this year. So when you consider, Kennedy, everything government did to prop real estate prices up over the last 2 years, I mean, you could make the argument prices are now just coming back down to reflect reality.
Yeah, I mean, it could be that a bubble has burst and we need to reset at a new baseline. But, you know, people are worried that because the circumstances are so different from 2008, we don't really know what the ramifications are going to be. Now, obviously, you remember back in 2008, we had too many homes. There were so many builders making so many places to live for people who had these mortgages with unverified income. And when that whatever income was there immaterialized and people went bankrupt, they defaulted on the glut of homes, so they stopped building homes. So now we have a housing shortage with inflation and high mortgage rates. So how does that different storm?
There is, look, people, Kennedy, aren't as leveraged as they were necessarily in housing in 2008. The one similarity, however, is that government basically is at the key of major malinvestment. Think about the last couple of years. I mean, government kept interest rates ultra low to supposedly inspire the economy, spur the economy. They literally handed out checks. A lot of that money went into real estate. Yeah. I mean, real estate prices are up 41% in just the last 2 years. That's an unheard of, that's really an historic jump for housing prices. So there's no such thing as a free lunch. Milton Friedman told us that decades ago. Unfortunately, no one in D.C. is listening. So as I said, as interest rates have gone on mortgages from, 2.5% to 7%, housing prices are just coming back down now to finally reflect reality.
So where do we go from here?
Well, I mean, as I said, the trend is down, and my fear, Kennedy, isn't so much, at least for homeowners, a lot of which were the first-time homeowners during the pandemic. It's not even so much that they made a bad investment, but they might have to stick with it. I mean, again, I look to history, and in Japan, where in the late 1980s, government did very much the same thing. They incentivized housing, and it took 30 years for condo prices in Tokyo to reach the 1990 pandemic, or the 1990 height. Literally, it took 30 years. So I don't want to be a Cassandra, but every time government gets involved in manipulating the economy, as they have with, of course, interest rates, but housing writ large, wealth destruction follows. So I'm a real bear when it comes to my own investments at CapitalistPig.com about real estate, anything in that sector and industry right now.
How do you feel about squatters' rights, Jonathan?
Well, I mean, if a property has literally been abandoned, then it is abandoned property, Kennedy. What's so frustrating about some of these areas, and I think this is what I probably hear you allude to, is that you have people looking for homes who can't get into homes because, to your point, homes aren't being built. I mean, there's an unlimited amount of homes that can be built only if government allows it. And it's not exactly a coincidence, Kennedy, that the most expensive housing markets, I believe 8 out of 10, are where in California, the land of NIMBY, where they want everything except development for people who actually want to afford a place to live.
Yes, they should actually name a housing development in Bel Air NIMBY. Yeah, homeless people, NIMBY. Yeah, the apartment buildings, NIMBY. All right, Jonathan, great to see you. Happy Halloween. Good having you in this discussion as always.
Be well.
Great.
Be well. Thanks, Kennedy.